World stock markets are rising to their highest level in more than 2 weeks. Stronger than expected results from a leading German business sentiment survey have boosted European shares, with both Frankfurt's DAX and Paris's CAC in positive territory. London's FTSE is closed for a bank holiday. Over in Asia, moves by China's central bank to strengthen the yuan has lifted investor sentiment. Shares on the Shanghai Composite and the Nikkei in Japan have rallied. Hong Kong's Hang Seng shot up more than 2%, which is the biggest one-day gain for the market in 6 months. US futures are pointing to another record day on Wall Street as hopes rise that the US and Mexico will finally seal a deal on the NAFTA trade agreement when talks resume later on Monday. Investor sentiment is also riding high after the US Federal Reserve Chairman Jerome Powell said interest rates were likely to continue rising. And the major currencies are mixed against the US dollar, with the greenback's safe haven appeal dimming. China's yuan is currently down after it gained some strength off the back of the central bank's move to stabilise the currency, while sterling is stronger against the dollar. And for more analysis on the currency markets, I'm joined now by Jameel Ahmad from Limassol in Cyprus. He's head of strategy and markets research at forex trading firm FXTM. Good to have you back on the program. Firstly, as we've heard, the stronger Chinese yuan is rallying the markets. Can you tell us exactly what did the central bank do there?
Thank you very much for having me. It's always a pleasure to contribute. So what the People's Bank of China, the Central Bank of China, have actually done, it seems they provided a little bit more assurance to the markets that they do not want to see Chinese yuan weakness. So obviously on the back of dollar strength, trade war concerns, and just ongoing emerging market turmoil over the past couple of months, there's been a lot of weakness in the Chinese yuan. So this measure, while nobody's really that sure what it means over the longer term, it appears to be a vote of confidence that the People's Bank of China do not want to see any further weakness in the Chinese yuan, and that they will aim to defend that 7 psychological level, which is seen as a very serious level for encouraging capital outflows, potentially some emerging market more weakness. And this is where the markets looked more positively on the Chinese yuan at the end of last week. But of course, as you mentioned, the conclusion of the Jackson Hole conference with Jerome Powell, and also this potential breakthrough with the United States and Mexico with NAFTA is actually driving sentiment today.
We also know that Donald Trump is keen to see the yuan strengthen as well. But let's look at markets here in Turkey, which have reopened after a week-long Eid holiday. I'm wondering, what's the lira doing?
So, as expected, the lira has actually opened trading after the week-long holiday under further pressure today. Turkish lira was weaker by as much as 3% as of about 20-30 minutes ago. It's not that much of a surprise because the same structural concerns that were in place before the week-long Eid holiday still remain, and there's concerns over central bank independence, concerns over a widening current account deficit, that inflation will still skyrocket over the next couple of months, and ongoing concerns that this might lead to some overheating in the Turkish economy. Because no measures have been taken to really settle investors' concerns, Turkish lira remains under pressure, and we've had weakness up to 3% so far today.
Okay, Jameel Ahmad in Limassol, thank you as always.